Pitfalls in dealing with unregulated entities. Some of the financial products traded in the market or offered by firms are not regulated by the MAS. MAS's regulatory regime safeguards the interests of consumers. It requires financial institutions to provide full and accurate disclosures on the nature and risks of these products. These safeguards are not available to unregulated schemes. In the event of a dispute, it will be difficult, if not impossible, for the consumer to pursue the matter, especially if they are based overseas. It is important to check the legitimacy of such schemes, particularly if the scheme promises returns much higher than those offered by established investment schemes. Here are some common schemes. Land banking. The practice of purchasing undeveloped land with the intention of holding on to it and selling it at a profit in the future. Land banking companies typically seek out investors to buy small plots of land and promise they would earn high potential returns because developers are willing to buy the land at much higher prices when plans for urban development are underway. Some may also promise regular payouts for a fixed period. The risk. If the development plan does not materialize, the value of the land will be affected and selling them would be difficult. It is difficult to assess if the purchase price quoted is a good deal and the value of the land is not guaranteed. There is also the risk of liquidity if other unit holders of the land parcel do not agree to sell at the price offered and your money will be tied in for a longer period of time. Foreign exchange risks, as land plots are located in foreign countries such as UK, Canada or USA. Tips. Ask yourself how much you know about the property, prices and land development laws in that country and area. Do not just rely on the salesperson advice, not even when the financial reports show consistent high returns. Do your own research to find out the likelihood of the land value rising. Find out the background of the company and whether the firm is regulated in the country they are set up in or selling the land in. Find out what can happen in the worst case scenario and how you can seek recourse should a problem or dispute with the company arise. Ask how the company generates its returns. Ask how you can get access to information on the value of the land. Find out how long you need to stay invested. And what if you need to draw out your money early? Get rich quick schemes. These are advertised on newspapers inviting individuals to attend preview seminars on forex trading. Preview seminars are often free, with some even throwing in frills to entice participants. Advertisements usually have catchy phrases such as "earn extra income quick" and testimonials of investors who have made huge profits in the market. The preview seminar will be packed with more motivating stories and you'll be asked to pay up a few $1,000s for a high-powered seminar or invest in some trading software or sign up to receive market updates. They will learn the trade secret. You will learn the trade secret, but the risks are as follows. For example, forex trading is a high risk and fast-paced activity. To be able to make profits in trading, one needs to have vast market experience, real-time market information, and a huge capital. As different forex markets operate in different time zones, it requires round-the-clock monitoring, but most retail investors do not have much or all of these. Forex markets are complex and would require knowledge and may not be suitable for everyone. When trainers at the preview seminar boast about the potential to make large gains with little upfront cash, they actually mean trading on margin or using leverage. The gains or losses can be magnified many times. Tips. Do not look at those who have made money. There could be more who have suffered heavy losses. Take time to research and compare other investment products, their risks and returns. Conduct independent checks on the seminar providers to establish the credibility of what they claimed. Gold buyback scheme. Entities promise to pay investors regular interest and/or offer to buy back gold at a price higher than the original purchase price. In reality, consumers could have paid more for the gold compared to prices offered by the banks or goldsmiths for the similar grade of gold, since there is no price transparency, and the entity decides on the level of details to disclose. The entity offering the scheme also does not disclose how they generate the returns. Consumers may not be able to liquidate their gold holdings if the entity is unable or unwilling to buy back the gold. Here are the risks. Gold prices are fairly volatile. Also, if the gold is held in custody by the entity and has been recycled for multiple customers, when the entity folds, the customer may lose the entire capital. Tips: ask how returns are generated so that you can assess the risks and if the returns are sustainable. Ask how disputes can be resolved and what happens if the entity folds. Compare with the price of similar gold sold in banks or goldsmiths to be sure that you are buying at a discount. Check if you are able to sell the gold in the open market and at what price. You can invest in funds investing in gold-related securities as an alternative to the gold buyback scheme. Virtual currencies or VCs. These are digital assets with monetary value that can be exchanged for goods and services at places that accept them. They can be transferred electronically from one user to another, but are not denominated in fiat currency, such as the Singapore dollar or US dollar. The price of VCs is typically not fixed. They are typically bought and sold on exchanges or between its users at a price agreed upon by the buyer and seller. The most commonly cited is the Bitcoin. The Bitcoin is currently not recognized as an official currency anywhere in the world. It is also not legal tender in Singapore. Risks: consumers may not be able to obtain a refund of their money should a VC scheme cease to operate. The value of VC schemes could fluctuate greatly within a short time period. Tips: ask the seller what if the operation ceased to operate. How are you able to exchange your Bitcoin back to cash? Ask yourself how the participation in VCs benefit you and are able to meet your investment objectives.